Okay, imagine getting a look inside a company, maybe one you haven't heard much about, but it's a quiet giant. It makes these tiny, super precise parts they basically make everything from car engines to giant windmills run smoothly. Today, that's exactly what we're doing. We're diving deep into Harsha Engineers International Limited, specifically looking at their Q1 results for fiscal 26 and what they've been up to lately. Our mission really is to unpack those numbers, figure out their strategy, and understand what it all means for this, well, global precision engineering player.
Yeah, and for this deep dive, we've got some solid sources. We're looking directly at their Q1 FY26 earnings presentation, the official board meeting outcome, and some really interesting bits from their latest earnings call. So it gives us a pretty complete picture, I think.
Definitely. Before we get into the nitty-gritty, though, let's just quickly set the scene. Harsha Engineers is actually India's largest maker of precision bearing cages. That's their core thing. They've got 5 plants and warehouses dotted around the world, strategically placed, and they supply parts to over 25 countries. We're talking 5 continents here.
That global footprint is pretty impressive for this kind of specialized manufacturing. And they've got a decent slice of the pie, too, about 6.5% market share globally for the main types of bearing cages, like brass, steel, polyamide. What's really telling is they supply every single one of the top 6 global bearing manufacturers.
Wow, okay, so they're plugged right into the biggest players.
Yeah.
And these bearing cages, they sound small, but they're critical, right?
Absolutely critical. They're not just spacers. They separate the rolling parts in a bearing, they cut down friction and heat, and help distribute the load properly. Super important stuff, and it's a growing market. Globally, it's expected to grow somewhere around 6.4% a year, hitting maybe USD 8.5 billion by 2029. And interestingly, the Indian market for these is growing even faster. Forecast is about 8.3% CAGR. So strong fundamentals there.
Right, and it's not just cages anymore, is it? They've branched out.
Exactly. They've smartly moved into other complex bits like precision stamped components and bronze bushings. And the key is they do a lot of it in-house, the tooling, the design, even automation. Give them control.
Okay, so with that background, let's unpack these Q1 numbers.
Let's do it. So consolidated revenue, this is for the engineering side of the business, hit roughly 34,883 lakhs. Now, for anyone wondering, a lakh is 100,000 Indian rupees. So we're talking about, what, roughly 3.5 billion rupees or around 42 million US dollars.
That's about right, and that's up from about 32,658 lakhs in the same quarter last year, Q1 FY25.
So a noticeable jump. What's driving that, do you think? Does it tell us something about demand?
I think it definitely does. It points towards, a bit of a comeback in key industrial sectors. And Harsha, because they have these established links to the big manufacturers, they're really well placed to benefit when demand picks up like this. Makes sense. And it wasn't just revenue. Profitability looked okay, too.
Yeah. Consolidated EBITDA, again for engineering, also saw a nice increase. Came in around 6,526 lakhs this quarter, compared to 6,236 lakhs last year, and their profit after tax, the PAT, that stood at roughly 3,726 lakhs for engineering, also up from 3,561 lakhs year on year. So, yeah, revenue and profit both heading the right way. It's encouraging.
Okay, good signs. Now let's zoom in on their core, the India engineering business. Revenue there was about 25,648 lakhs in Q1, up from 24,365 lakhs last year. EBITDA for just India was around 6,385 lakhs, and a PAT about 3,983 lakhs. But what caught my eye was that revenue from outside India on that consolidated level was over 61% of the total. That seems significant.
It really is. It shows that their global diversification strategy is working. I mean, the indie business is performing okay. Satisfactory, they called it. It grew about 5% top line and maybe 6.5% in adjusted EBITDA compared to the previous quarter, Q4. But having over 60% of revenue coming from international markets, well, that reduces their dependence on just India. Sequentially, quarter on quarter, the India business was kind of flat. But that's often expected because Q4 is usually their strongest quarter. So holding steady into Q1 isn't bad. But yeah, strategically, that international slice is really important for growth momentum.
Okay. And speaking of strategy, they've got this big new plant, right? The Harsha Engineers Advantech Limited, or HEAL plant. Phase 1 started production in June.
That's right, the Pela plant. Phase 1 commissioned commercial production on June 26th. A big milestone, definitely.
But as you sort of hinted, it's dragging on profits initially, fixed costs and all that.
Exactly. It's expected when you fire up a brand new facility. You've got overheads, interest costs, depreciation kicking in before revenue really ramps up. So yes, HEAL reported negative EBITDA and PAT in Q1 because of this.
So what's the plan to get it into the black?
Management seems confident they can turn it around, make it profitable by the end of this financial year, FY26. They've been pretty strategic with the spending. They spent about 44 crores, that's 440 million rupees, or roughly 5.3 million US dollars on capital expenditure in Q1, mostly for this Pala site.
Okay.
The bigger picture is an investment plan of around 300 crores, so 3 billion rupees over maybe 2.5, 3 years. They've already put in over 200 crores. Expect another 100 crores or so over the next year and a half. And this new plant is going to make bushings, those large-size bearing cages, and stamping products. So yeah, it's a short-term cost, but it's really laying the groundwork for future growth in those areas.
Right. Investing for the future. Makes sense. And elsewhere internationally, things are looking up a bit. You mentioned Europe and China showing signs of life.
Yeah, there are some early but positive signs of industrial demand picking up again, especially from Europe, but also China. And you see that reflected in their numbers. Harsha, Romania, for example, saw its revenue jump almost 18% in Q1 this year compared to last year. That's a pretty significant turnaround for them after some tough quarters. Suggests European industry is stirring.
Okay, that's good news for Romania. But overall, the foreign subsidiaries are still losing money.
Well, yes, on a combined basis, Romania and China together reported a loss. That's mainly because Harsha, Romania, despite the revenue growth, still had negative EBITDA. It takes time to fully recover. Harsha, China, though, is actually doing better, growing both top and bottom line. So a bit of a mixed picture there. The company is clearly focused on cutting those combined losses from the foreign units. They're aiming to roughly halve the loss compared to last year's total, which was about 17 crores. So definitely working on optimizing things globally.
Got it. Now, let's shift to specific products because there were some really interesting developments here. Bronze bushings, you mentioned the new plant will make some, but the existing business seems to be booming. Sales were about 25 crores in Q1.
Yes, that segment has strong momentum. They mentioned strong positive tailwinds. And the really big news is they just signed a new agreement for bushings with one of their big multinational customers. The potential revenue from this single contract is pegged at around 117 crores per year. That's quite significant.
117 crores a year. Wow, that sounds like a potential game changer for that segment. How fast can that revenue actually start flowing?
It's definitely a major win. It really positions bushings as a key growth engine going forward. Now, they were careful to manage expectations. You only see some incremental revenue from this specific contract maybe in Q4 of this financial year. It'll likely take 2 to 3 years to fully ramp up to that peak annual sales figure.
Okay, so not overnight, but substantial.
Exactly. And they anticipate needing to invest more CapEx specifically for bushings, probably late this fiscal year, early next, just to handle the volume from this contract. But overall, they expect the bushing segment to grow handsomely, their word, at least 30% just in this current financial year.
30% growth this year alone. That's impressive.
It really is. It shows how focusing on these, seemingly small but critical components like bushings can unlock huge potential. Specialization pays off.
That's a great point. And what about the traditional cages, the large size ones?
Also seeing a positive trend there, a welcome uptick, as they put it. Sales improved significantly in Q1 compared to last year, and they mention a good flow of new orders coming in India as well. So positive signs for that key product line too. Stamping sales, on the other hand, were more or less flat, so mixed results across the different product types.
Okay. And briefly, the solar business. How's that fitting in?
Yes, the solar EPC business. Its top line was also flat in Q1 compared to last year. But importantly, the EBITDA and PAT are still positive. Management basically said it's running largely in auto mode, needing minimal top management attention.
So stable, kind of self-sufficient, letting them focus elsewhere?
Pretty much. Allows leadership bandwidth for the engineering side, where the bigger growth opportunities seem to be right now.
Got it. One other point, there was a new sourcing contract for cages, a major one, that got pushed back.
That's right. They had expected revenue from a new major sourcing deal for cages to kick in during the second half of this fiscal year. That's now been postponed, apparently. So the revenue impact is likely pushed into the next financial year, FY27. Despite that delay, though, they sounded quite bullish about the second half of this year, FY26. They expect sales to be much stronger than the first half because of other factors lining up.
Interesting. And financially, how are they managing things like working capital and the funds from their IPO?
Seemingly quite well. The consolidated working capital cycle is holding steady at 139 days. That's a key efficiency metric they track. And regarding the IPO money, they reported it's been used pretty much as planned. There's only a small amount left, about 444 lakhs, that was earmarked for machinery capex but hasn't been spent yet. So it suggests disciplined financial management using the capital raised for its intended purpose.
Okay, so let's try and tie this all together. What does it mean for you, our listener?
Well, we're seeing a company, Harsha Engineers, with a solid core business in India that's performing decently. At the same time, it's dealing with the upfront costs of a major new plant, the Advantech facility, which is normal for this kind of investment.
Right. And there are definite green shoots in demand, particularly from Europe, which is boosting Harsha Romania and also helping India's exports. The bushing segment looks like a real star performer, especially with that huge new contract secured, big potential there. And large-size cages are also picking up, which is good news for their traditional strength. Yeah. So even though one big cage contract got delayed, the overall outlook for this financial year, FY26, seems, well, cautiously optimistic. They're guiding for low teens percentage growth in revenue for the India engineering business and maybe high single-digit growth for the consolidated entity. And importantly, they expect profitability to be better than last year, FY25.
Exactly. They're clearly investing for the future, the new plant, the capex for bushings, while keeping operations running efficiently and managing their finances prudently, like with the IPO funds. This whole deep dive really shows how a company like Harsha has to carefully balance these global demand shifts with very strategic long-term investments. It highlights, I think, the power you get from specializing in a complex industrial world. So you should now have a much clearer picture of how global trends, regional demand, and product focus all impact a key player like this in precision engineering.
Absolutely. Harsha Engineers is definitely playing a long game here, investing in new capacity, expanding these high-potential areas like bushings, which leaves us with a final thought to chew on. Considering these strategic moves by Harsha and their unique market position, how might the whole evolving global industrial scene change the role and maybe the importance of precision engineering specialists coming out of India over the next few years? Something to mull over until our next deep dive.